Good morning, good afternoon, depending on which part of the world you reside. Welcome to this week's edition of TurnKey Insider. Welcome if this is your first week. Before we get too far, I do want to do a quick mic check. Please type a 1 in the questions box if my voice is coming through loud and clear. All right, excellent. Thank you, Susanna. Welcome back. Excellent. Thank you, Alan. Good to see you in the class. All right. So before we do get started, of course, we have our standard legal disclaimer. I'll leave this up for a bit. And a heads up, we will be changing the time of this class probably to later in the afternoon, just due to some of the way our scheduling is here in the office. We do have to shift it. So I do apologize if that makes it so some of you can't make it, but I will still have these up on the website in the video center by the end of the day afterwards. So, which is all right because usually Fridays are pretty slow. Today is a bit out of the ordinary. I guess there were some good earnings reports at the end of the market last night, and the NQ took off, and then it continued. I'm not sure what time exactly. I'm guessing probably 11 a.m. Pacific time, but I'm not sure yet. We'll send an email to everyone Monday to give you a heads up on the definitive time, and the reminders will also reflect that time change. So. All right, without further ado, let's jump in. And of course, if you guys have any questions, feel free to throw those out there. I do want this to be kind of open forum. And you never know, the questions you may ask may help someone else and kind of jumpstart them. Because it might be a question they don't even realize they have to ask yet. So that can always help kind of jumpstart someone's learning and effectiveness with TurnKey. So a few things this morning. While Fridays are typically slow and the markets have been fairly slow in general, after market close, I believe there were some earning reports for Amazon and Google, and they came out better than expected, so the NQ took off right after those came out last night, which was after 4 p.m., so the market was pretty much closed. But that has continued on until today, which is great. A lot of this, pre-market, but I really like when we see this just really long trend, right? We have a trend pretty much established since the open, very strong. This right here, it is technically a bounce, but you guys have heard me say many times that we really like to see the line, our yellow line here, come from an extreme and get all the way to the 25 at least. Those are the strongest qualified trades. So while trades like this will certainly be qualified, not coming all the way down. And also a few other factors play into it also, mainly being how long has the trend been established. And we have a really long trend here that's just been, chugging along pretty consistently since the open. So that's a good sign and something that kind of lets me know I may not have to wait for the yellow line to get down to extremes. So each of these significant lines we have here in our direction ribbon panel, the bottom panel here. Each one of these lines can really act as support or resistance. So just why it's important, why I like to see the yellow line come from the extreme, either 100 or above, and kind of bounce off the 25. So here we have a similar situation where it just bounces off our 60 line. So very important, whether you want to take these or not, or wait for the more strictly qualified. If I didn't take this one, we'd certainly try to hop in on this trend as well. Now, of course, this goes, as you've heard me say, when the markets are slow and we don't have a lot of strong trends develop, then I like to see the yellow line come from an extreme on the opposite side and get to our basically our trading zone where we're looking for the yellow line to get to. So here we're under 100. We didn't come from the opposite extreme. We did just come off a bounce, and it has just been one clear trend the whole way. So if we hopped in this one and you're going for 6 ticks, we would have hit our profit target, and then this one would have wicked us out at break even. Going to happen sometimes. There's a little pullback here and there on these long runs, so going to happen. Certainly would hop into this one. We have a very clearly established trend. I mean, everything just looks textbook trend, and this would have been a very good trade, whether it would have hit profit target, whether it would have hit the I mean, it certainly looks like it would have hit the 20 tick if you have your runner, as there are a few different money management strategies. Not really different money management strategies, but you have a few options in how you want to manage the runner. When first starting out, I like to go with having the runner not as just a trailing stop, but have it aim for a 20 tick profit target. So that's 5 points in the NQ, or comes out to an extra $100. So it's a pretty decent and respectable profit target for the runner. And I've favored that recently just because the markets haven't really been giving us these long trends like this, right? So, I mean, this is the first time I've seen a run like this, and I don't even remember. It's been a couple months where I've seen something like this. So I guess there was probably last week, there might have been a long run up in the YM and the NQ as well, but it's been very few and far between in recent memory. So, and not to say that just because we see one long run that we're going to see this all the time. We very well could be, but basically either money management strategy is acceptable. Either that, trailing at the white line is also a great strategy for when first starting out, and we wait till the white line value is above break even or our entry price, and then we start trailing that way. So this one would have gone a little ways as well. And then we also have the third option, which is certainly a lot better when we see longer runs more consistently, and we haven't just seen those lately. So I actually did prefer trailing at the orange line for quite a while until the market just kind of slowed down and wasn't really giving us any runs. Trailing at the orange line, while we do have to wait longer before we can start adjusting or trailing our stop, we can often ride over these tails here that come down and pull back. As you see, they more often hit. I mean, here we got stopped out. Would have been better off trailing at the white line, of course, but you can see most of the time a lot of this pullback will come down to the white line or a little past it, and it's certainly more uncommon for it to hit the orange line. So that's why I prefer that out of all of them when we're seeing moves like this regularly. So, which just hasn't been happening, so I don't want to try to convince you to switch to trailing at the orange line. Really, it's up to you which one you want to use. I think all three are extremely effective, but I do, uh, for these current market conditions and how the market behavior has been uh, in the past couple months, I have been sticking with the 20 tick target, just because it seems that the market will go 20 ticks more consistently than we'll get to the point where we start trailing at the white line and we secure 20 ticks from that trailing stop. So I'd rather shoot for a guaranteed 20 ticks or a higher likelihood of hitting 20 ticks and being satisfied with that than trying to get these trailing stops when I know the market isn't really trending out of control. Um, and I might get in these positions where I start trailing at the white line, and I may grab 5 or 6 ticks. Just still, I mean, that's a decent trade, but perhaps if we had left our stop at break even and just waited for the 20 ticks, we would have gotten that instead of 6 or 7 ticks. So, but on the flip side of that, if we're leaving our stop at break even and we do get some pullback before we hit the 20 ticks, then we'll just have our initial profit target. So kind of a toss-up, but if that's the case, we probably wouldn't have started trailing at the white line anyhow. So probably the first decent opportunity. These ones are a little more risky to me because we're at our extreme line. Or we're right here at 120. So that's a little too extreme for me. And this is one of those cases where the market is just, I mean, it's going up no matter what. We don't always know that's going to happen. I mean, looking at it like this, if I see this tail come down, I'm not sure I want to hop in. You may want to, but I feel there was, this borderline trade, and then we had this very good trend trade in here. That's usually enough for me in one leg, especially if I caught this bit of runner or grabbed the 20 ticks. I don't like to push it, and certainly 2 trend trades in a run is my limit. And the reason for that is that we don't know when it's going to run out of steam. We just get so far into the extreme. I mean, the trend could certainly push beyond, as it has done this morning, but we don't know that. So at some point, I have to say to myself, the risk is too much for me to hop in another trend trade. So I'm just going to sit it out. I got one decent trade, possibly this one. Not sure if there was news. Haven't had a chance to check news just yet, but there is usually 10 a.m. news on Friday. So, but again, I mean, some days it's just, the market's going for a ride, and some days it's more worth the risk than others, and it really is kind of unique, or more unique situations like this that haven't been happening too often. So hopefully becomes more common as we move forward. So have been seeing some better trending days lately. So hopefully that continues. And then so I couldn't really hop into these, didn't hit the orange line. So even if we did take one of these, it's likely we would have just hit profit target and gotten stopped out at break even somewhere around here. So could maybe have grabbed a couple extra ticks if we got on this first one. But there was 10 a.m. news, so would have kept us out of these. Again, we don't trade during our news window. So one thing I did want to point out I was hoping it would still be there when we started the class, but we did have this possible, it was gearing up for a bounce. So I kind of wanted to show how we could anticipate these bounce trades. Um, but after we come off this long trend, and then I get a turn bar, as soon as the market reverses, I'm waiting for that bounce. I'm waiting for the market to start to reverse again and continue long. This time the reversal just went a bit too far for us to comfortably enter this. Our yellow line dips below zero, the histogram dips below zero as well. So just went a little too far. There was a lot of back and forth on this bar. But as soon as this one reaches up and crosses the orange line, I mean, it's a perfect, I get my yellow line, come down, dips below 25, which is exactly where I want to see it, between 25 and 0. Those are the most strongly qualified trades. Unfortunately, there was just too much pressure pushing it down and didn't quite make it. But this is really when we want to start gearing up for a bounce trade. And you can see we have plenty of time. These bars are so large that once I see, I mean, after this reversal and then I see the market start ticking up again, that's when I'm looking for the bounce. And I mean, once it crosses this orange line, I have everything lined up. I don't care about the bracket color for a bounce. Everything's green, has been the whole day. My yellow line is in the perfect range, came from an extreme. As soon as it crosses this orange line, I put my order in at the green DPI. And then we see we didn't get there, just cancel my order, no big deal. It's not always going to work out in our case. And then we're getting kind of into this weird situation where we do have this trend to trade. It didn't really come from an extreme, but we do have quite a long established trend. We have a little hiccup where we don't have green here. And the only thing that kind of concerns me about this one is we'd be heading into the high of the day right here. So, but we do have a very strong overall trend for the day. So not an overall bad day for the NQ, especially for a Friday, which are typically fairly slow. So not much cooking up in the Russell. I still look at the TF. I don't actually have live RTY on this computer. But this is pretty textbook chop. So this is what I like to cover and how we can kind of have a heads up. We have choppy market conditions. Let me go ahead and switch to the RTY. I'm sure it looks very similar. Volume's just a little higher. But this is what I like to call the zipper pattern, where we keep hovering around the 200 EMA. So we have this 200 EMA going through, right through the center. My signal and trigger line are just kind of wrapping around back and forth and follows the same patterns as the bars. So we just keep getting pulled back to this 200 EMA pretty consistently. Don't have any type of trends established, so really not looking for much in this market right now. This is a very good sign to just kind of watch it for a while. And you notice after we come from this extreme here, we kind of just hop over the 60, bounce off this negative 60, and then you'll probably see this happen throughout the day. It could certainly break out. But once it gets locked in here, it can seem to just stay that way for the rest of the day. So something to keep in mind. When I start running into a lot of resistance at these 60s, I do pay attention to that. And even a little bit more. It is something to keep an eye on, can give us a heads up that, you know what, maybe if we see a trade that's qualified but not very strongly qualified, it could lead us to the decision that, you know what, we probably shouldn't take this one. It might be a little too risky. So kind of same story with the EMD. I actually like the EMD. I know some people don't like it because it has a bit lower volume than the other markets, and you can get a lot of slippage. You might get your orders jumped over, which, I mean, that happens to me in any market. So um, I don't feel like it happens more often in the EMD. I've actually had that experience more often with the uh, in the NQ lately, just because the market seems to uh, get in these really fast moves, and I jump over my entry. And since I use a stop limit and look for a specific price, I don't usually put a tick range in there because I don't like to deal with slippage or adjusting my profit targets or any of that. So I like to get in at my exact price and can often get jumped over that way. Which is something I guess I should mention because it's kind of been coming up a bit with people who are newer to trading in general. So if you're picking up Turnkey Trader and you're just new to trading or haven't traded in a while or have never traded futures specifically, something to keep in mind is that just because we put in an order, it's not guaranteed to get filled. So there's a lot of factors that come into that. I mean, most of the time we do, but you have to figure those times where your order doesn't get filled, um, someone else's does, and then there's going to be times where you get filled, and that means someone somewhere did not get filled. So not everyone is going to get filled at every price we want to enter into. So it's just part of trading. The best thing to do really is be ahead of the game, try to have our order in as far ahead of time as possible. But specifically using stop limit orders, since we look for a specific price, does help to avoid or reduce slippage. So not guaranteed to, uh, but does do quite a good job of that, even though um, it results in us sometimes not getting filled. So I don't like using limit orders or putting a range in my stop limit because then I'd have to adjust my profit target. We'd still be looking for the same profit target. So if I got filled 2 ticks worse than I wanted to, I'd only be getting 4 ticks instead of 6, which, I mean, may be worth it to you if you want to use the put a tick range in the stop limit. So with the EMD, something I've noticed is that the EMD tends to be a bit more lax on the extremes. So I see the bounces succeed quite often, even without the yellow line coming from an extreme. I mean, I still want it to get fairly close, but I mean, if you go back historically and look, even just check over the month of October or the month of September, um, you can turn the trade marker on to make it a bit quicker to find some of these trades. But you'll notice these bounces that don't necessarily come from an extreme still usually hit profit target at least, even though the EMD hasn't been giving us a ton of runs, but sometimes it does. Again, it is a higher tick value, so you may want to weigh whether that risk is worth it. But I think the EMD is one of the best markets for a turnkey trader. So, all right, everyone, we're about halfway through the class already, so feel free to throw out any questions if you want to take a look at particular trades. Doesn't necessarily have to be in these markets. If you trade a different market, I'll be more than happy to pull it up. If I have a data feed for it, I don't have a data feed for all the markets, so but most of the common ones I do. Um, or if you just have general questions, feel free to throw those out there. And the YM, you'll probably hear me say quite often that it's not a main market I like to watch, that I don't pay attention to a ton, but it's one I still leave up because it seems like once it gets trending in a direction, then it seems to move in that direction for most of the day. I mean, we do get some pullback. But it does seem to give us, I mean, moves like this. Not sure we really had an entry that was kind of borderline, didn't really touch the orange line. Um, but, I mean, sometimes we can get in on these moves, and when we can, it is. I mean, it's worth having it open at least so that we can check on it periodically. It doesn't seem to move very fast. It just kind of chugs along and typically moves in one direction. We did have quite a run up last week after it hit the new high, and then we, got into this back and forth where we seem to be, yeah, now we're back in this range. After it broke 23,000, I think it got up to about 23,400, is somewhere around there, is the highest I've seen it, and then since then it's been cycling, and we seem to be able to push up to about 23,400 thereabouts, and then the market will reverse. So it seems like that's a strong point of resistance for now. I do suspect that it'll probably continue. We'll have another major run up and break a new record high. I think the Dow's broken the record, I don't know, 5 or 6 times this year. So which is why I like to keep it up. It doesn't give trades every day, but I mean, there's going to be that one day where just having it up and you see a great trend trade or bounce that lets you get in a long run that ends up breaking a new high and, may be able to trail that. But to me, it's worth the opportunity. It's not a market I'll sit there and watch intently all day, but much like the CL, which the CL with this system just really doesn't give us a lot because it doesn't move that much. So CL's one I don't really watch with this system at all. I'd rather focus on the NQ, RTY, and EMD, and then kind of leave the YM up. Also the FDAX. I don't know if anyone likes the FDAX here. Let me go ahead and pull that up. So that's a good option for anyone who you might work during normal market hours. So the FDAX is open before our market opens. So I want to say it's like 2:30 Eastern to 12:30 Eastern, 11:30. It does adjust once a year for Germany's daylight savings time. It's a German market. I'm going to just bring this guy up here. So depending on when you trade it can I mean really depend. It's a market I wouldn't suggest just diving into. So it is higher tick value. It's 12.50 per tick. Um, so there is a bit more risk. It's one you do kind of have to study and just kind of pay attention. It does go through short. It seems to go through short periods. Where it does the same type of moves consistently for short periods of time. So it's when you kind of have to actively study and keep track of uh, what the market's doing and uh, try to identify any short-term patterns that you may see. Um, so I haven't been checking it out lately. I just haven't really had time. Um, haven't been getting up as early to come in and trade the FDAX like I usually do. There are some other markets in the morning. So if you guys work during the day, the 6A and 6E are the futures currencies for the well, there's the euro. No, I'm sorry. So 6E and 6B, that's the futures euro and futures British pound. Um, those are also pretty decent markets to watch. They're open roughly the same time as the FDAX. I think there might be an hour difference. Um, and they move kind of slow, but again, they're like the YM where they move consistently. So, I mean, you may only get one, two, maybe three trades a week off of those, sometimes a trade a day, but they usually seem to consistently move once the market goes in a direction. So there's not typically a lot of chop in those markets. So things to keep in mind. And if you aren't able to check these markets out or aren't always able to check out our markets, there are the Australian markets in the evening, and then also the Tokyo sessions are open in the evening. I think those open at roughly 6 p.m. Eastern, and then go into the night. So just some different options for you. But of course, whichever markets you choose, I mean, we've just had success with the NQ and EMD and RTY, and it's kind of like if it's not broke, don't fix it. There are certainly other decent markets, and anytime you investigate a new market, because we certainly don't have time to look at and assess every single market that's out there. There's a lot of them. A lot of them aren't going to be worth checking out simply because they either don't have the volume or they don't move enough for this system. So a lot of like the small agriculture futures probably aren't going to do much for this or do much with this system. But maybe something like gold, I've been checking it out here and there. But anytime you check a new market, I always suggest, going back about a month or so, at least, more if you can, and really just kind of assess, does the market move enough to present enough trading opportunities to make it worthwhile? Or does it not really trend? Does it just kind of cycle in these short bursts where we're not really going to see much? So those are kind of things you want to look out for. And then, it's a good idea when you look back historically. I like to put the trade marker on. It makes it a little quicker to check when there's qualified trades. Of course, that doesn't catch every single situation, but it does help and give you a good overview of the market in general. So if you don't have that on by default, I turn it off. I don't necessarily like it that much when I'm trading. I mean, it's good confirmation, But you can right click on the chart, come to the indicators menu. So if you don't have it on, it should be on the template by default. You can add it here, the turnkey trade marker. And this just plots when there's qualified trades. So again, it is fairly strict and conservative. So it will not identify every single qualified trade. It's more of a training tool, and the reason for that is we can't really program it to plot live. So just the way some of these indicators work, we can't check some of them live, and that can affect the qualification of a trade. So unfortunately, in NinjaTrader, we haven't been able to do it. So it's more of a training tool to help you confirm while you're learning the system that, hey, is this one a qualified trade? Or, I think this is a trade. And then after the bar closes, the text will pop up. Occasionally it catches it before the bar closes, but it's usually pretty close by then anyhow. So I do suggest just getting familiar with the rules and just the overall patterns of these trade setups. But certainly do use this for confirmation when you're learning and practicing. Yeah, so this one, not quite a trend trade. We still did have our gray bars, which is very borderline. I mean, it might be one of those where it's so borderline, but I don't want to give anyone bad habits, so it's not a qualified trade. We want to make sure to stick to the rules because, of course, hindsight's 20/20. So I can look at this in hindsight and say, oh, I maybe would have taken that anyway, even though it's not fully qualified. It's like very borderline, and that's really a bad habit to get into. So I don't like to say that. I like to try to be honest with myself when I look back historically or look back over possible trade setups because hindsight is always 20/20. We can always look at these charts looking back and convince ourselves that we would have made the right decision in real time. But if I look at this point where this bar was forming, can I honestly say I would have entered this trade? Probably not. We just came down, didn't really come from an extreme, but we do have such a long trend. But again, these are out of order. I really like to see these in order. I like to see my green bars. So and the important thing is we have to stick to our rules. We have to be consistent. Once we stop doing that, we just open ourselves up to more risk. So certainly if you go back and look at this type of situation, however often it happens, and decide that, those actually work a good amount of the time. I like those. That's fine. We can't, I can't stop you. I know traders like to look for their own trades all the time, and you'll probably notice other patterns that we don't have rules for, and that's well and fine. But anytime you do that, you just want to do your due diligence and enough research to make sure that that pattern holds up. So I know that's fairly common. I know quite a few of our members who use our indicators in conjunction with some other ones, and they do look for our trade setups, and they add a little bit of their own secret sauce to it and make their own trade setups, and they do very well. But they've put in the work and research to make that determination. So, you don't want to just go back 2 weeks and look for specific patterns. And you have to be careful of a few things. Confirmation bias, which is something we can all fall prey to. It's just part of how the human mind works. But subconsciously, we just kind of start looking for information that confirms something we already think is true or something we already believe. So if I already think that this trade setup is a winner, and then I go back and look historically, I should be very careful to pay attention to all the times that that setup worked out and all the times that it didn't, because my brain may be trying to like subconsciously filter out the times that it lost or uh, not being honest about it, um, which is easy to do looking back historically. So, but we do want to remain diligent with following the rules and remain consistent, because once you start testing out things on a whim, that's when we can kind of get into trouble, because it may work out for you one or two times, and we start to just, reinforce our thinking that it's going to work without really putting in uh, the time to do the research, and then eventually that'll come back to bite us. So if you set out to make an adjustment to patterns you're looking for, it's a good idea to kind of test one thing at a time. Don't make a change and then test it once or twice and put it on then make another change, test it once or twice. Um, you really want to kind of stick with something consistently for a while. And I always recommend, if you get to that point where you start noticing your own patterns, of course, test them in sim for a bit, not too long, as it doesn't always give us an accurate representation of um, trading live with that. Um, but you certainly want to be comfortable with any setups, and especially, if you're even starting out with learning these setups, you do want to, we do recommend, trading in sim until you get comfortable entering the orders, either, putting your targets manually or using the ATM, and just getting comfortable with identifying the trades and entering the orders, and make sure you fully understand the rules and aren't giving yourself any false positives, which I think is kind of hard to do with the system. The patterns are fairly consistent. They always look, the bounce trade always looks the same. So, I mean, there may be degrees where the yellow line gets to, and how strict we are with that particular qualification really depends on how strong the trend is. So there are exceptions to the rules, but when first starting out, to stick to it by the book and take the most qualified trades. We don't want to get in the habit of over trading. We really want to sit here and wait for the best setups possible, which I know gets difficult when the markets are really slow, as they have been over the last couple months. But we've all been in the same boat. And while it has been rather slim pickings overall, I feel that TurnKey Trader is really good at keeping us out of just risky markets where the market's choppy. And if it's not giving us anything, that's probably a good thing, that we're not entering into these markets that aren't trending well and are choppy or just sideways overall. So it's good at keeping us out when the market isn't right to trade anyway. But of course, you don't want to sit and watch the charts all day and not get any trades. That's kind of can be like watching paint dry, but even though the markets are slow, there are still some trading opportunities, and it seems like they may be picking up now, so we'll just have to see if that continues. Certainly hope it does, as it has been uh, rather slow for quite a while. So, all right, we're down to the last couple minutes. So, any last minute questions? Speak now or forever hold your peace. Of course, you can always send us an email to support. We'll be happy to get back to you as quickly as we can, or feel free to give us a call at the office. Any feedback or suggestions for the class, feel free to throw those out there as well. I do want to gear this, this class is for you guys. We want to make it as educational as possible. So something to keep in mind is that we have members who have been using TurnKey for a while, or newer members. So we do have to kind of tackle a wide range of subjects, but getting into more specifics can be helpful for everyone. So if there's something you want to see covered specifically or gone into more detail of, send an email to support and we'll be happy to take a look at that for you. So, or cover it in class. So this is for you guys. So we want to make sure everyone is up to speed with TurnKey Trader, has all the tools necessary to trade effectively. We have a list of all the previous classes at the member site in the video center. I'll have this one up before the end of the day. And also, just review the rules and watch the tutorial videos a few times if you need to. And really the best thing to do is just kind of hop in there. If you're not comfortable trading real money yet, or you don't feel you have a strong grasp on identifying the trade setups, the best thing to do is either print out the rules or have them on a separate monitor if you have multiple monitors, and just watch the charts and enter some trades in sim. Kind of go through the checklist of rules until you get familiar with the patterns. Because eventually we shouldn't need to go through the checklist. We just kind of identify the patterns that happen because they always look the same. The bounce always looks the same. Trends always look the same. It's really just a matter of how long the trends have been going and that type of thing. So, all right, everyone, I'd like to thank you for joining me. So just a reminder, we will be changing the time of the class. I'm not sure exactly what time yet. I'm guessing 11 a.m. Pacific time, but we will send an email either later this afternoon or Monday with the definitive time, and then your normal email reminders that come out usually Thursday evening and Friday morning. Those will reflect the time change as well. So, all right, everyone, thank you for joining me. I hope we were able to learn a little more than we came to class with. And again, any feedback or suggestions or just general questions that pop up later, feel free to drop a line to support. I hope everyone has a wonderful rest of the day, a wonderful weekend. I hope the markets treat you well. And until next time, happy trading.